So President Biden is back with another plan to bring down oil prices. But I must say that this is a Twilight Zone idea that won't work. And you quickly see it is more of an attempt than a real strategy to bring down the price. Now, we have to understand why Biden has come out with this three-part plan to strengthen US energy security, encourage production, and lower costs. Now, firstly, inflation in the US is still insanely high. Yes, energy prices have come down with the CPI for gas dropping to 18%, but that is still very high, especially when we are already in the midst of a recession. Second, OPEC Plus isn't playing ball and they have cut oil production, so they have lost control of the supply side overseas. Now, thirdly, the midterm elections are coming, guys, and Biden's approval ratings are in the toilet. And according to the Pew Research Center, he's polling 38%, which is one of the lowest in history leading up to the midterms, so he needs to pull out a win. And this video really isn't a review, it's a post-mortem of a plan that probably isn't well thought out. It won't be effective enough to bring down oil prices in the long term. Now, the plan comes in three parts. The first is the Department of Energy selling off 15 million barrels from the Strategic Petroleum Reserves, or the SPR. They are draining away 15 million barrels to push down the price of oil. And the second is the administration's plan to repurchase crude oil for the SPR when oil prices are around $70 or below. They plan to entice oil companies to pump more oil by reassuring big oil that the government will be there to buy oil at $70. Now, thirdly, Biden is calling for oil companies to pass lower energy costs to consumers right away. He wants big oil to use their profits to subsidize prices at the pump. Now, on the surface, all this sounds like reasonable steps to push down the price of oil. You flood the markets with 15 million barrels, you commit to buying oil down the road, and you get oil companies to share the wealth. But when we dig deeper, we'll quickly realize that the plan is doing too little too late, and at many points very contradictory. I'm not blaming President Biden for doing a Hail Mary pass and taking a spin at the roulette table, but this is a truly bizarre plan. Now, let's address the selling of the SPR first. Biden has announced the sale of 15 million barrels of reserve oil, but the impact this will have on oil prices will be minuscule. Now, the big issue is the sale of the SPR is a one-time event. You are not selling off 15 million barrels a day, it is just a one-time release. And if you compare this with Saudi Arabia's crude oil exports, which is around 7.6 million barrels per day in August, the 15 million barrels number from the SPR accounts for only 2 days of Saudi oil exports. It is a drop in the ocean. We can also compare it to the OPEC cuts of 2 million barrels a day. Now, the 15 million barrels account for only 7.5 days of the production cut from OPEC Plus. Sure, the release might affect the immediate price, but it won't have a lasting effect. All OPEC needs to do is to cut production a bit more, and this move is counted within days. And according to Goldman Sachs, the SPR sales will only have a modest influence on oil prices, dropping them by less than $5 a barrel. And the former head of the EIA, America's own energy agency, went on record saying, "We are talking about fairly small potatoes here, with putting 15 million barrels into the market." And the problem with selling the SPR is that it opens the US to oil shocks. We can see that the SPR is now at 405 million barrels. Nearly half has been drained away from its peak of 726 million barrels back in 2011. This is dangerous business because reserves are meant to be utilized during times of crisis and not really to try and move the prices of the oil market, right? The oil market is too big to be influenced in such a way. And let's have a flashback to the oil shock in 1973. America experienced an oil embargo by Arab producers. Now, the OPEC, which included Saudi Arabia, actually stopped exporting oil to the United States. Now, this caused the price of oil to go from $3 a barrel to over $11 in just 3 months. And this was one of the core reasons that SPR came into existence, right? Just in case oil producers decide to embargo the US again. So releasing the reserves to push down the price of oil might not be the best idea. It should be a last resort when there can be no other option available. Now, the second part of the plan, filling up the SPR at $70 is also an issue. Biden has promised oil companies that he will buy their oil at $70 in the future. So the idea is if you're an oil producer, it will get you to pump more oil. because there will be domestic demand in the future if the price falls too low. And President Biden said refining and refilling the reserve at $70 a barrel is a good price for companies, and it is a good price for taxpayers, and it is critical to our national security. So that technically sets a floor at $70 for oil so that local oil companies can sell to the government. Now that is a good move, but it probably isn't enough because American oil production prices are just too high. And let's take a look at the break-even price of oil wells. And I want us to focus on the break-even value for the new wells, which is colored in blue. Because Biden's agenda with this plan, after all, is to encourage new oil production. And we can see the price of oil for a lot of the new oil wells in the US have break-even prices of over $50, especially shale oil, which sits at $69. And this means if the price of oil collapses again to under $70, many American companies will just stop production because either the profit is too little or they could go bankrupt, they could go under. And this means the SPR could very well be refilled at $70 or below, but it'll be from overseas imported oil. And a better move would be to guarantee oil companies that the US government will refill up the SPR at a premium from US producers. Yes, the subsidies will probably be the taxpayer dollars, but it will give oil companies in the US a greater incentive and better reassurance. But there's another big assumption. How long will it take for oil to drop below $70, right? What if it doesn't drop for the next 2 or 3 years? What if OPEC or Russia decides to cut production even more? Now, Biden here is trying to time the price of oil. He is betting that the oil price will crash soon enough because the longer high oil prices drag out, the more empty the SPRs will be, which is bad for energy security. But the faster oil prices do crash down, the less incentive oil companies have to start drilling and producing new oil. But I think the one thing that boggles my mind the most is telling oil companies to pass savings on to consumers, but there are no reassurance given to them. Now, Biden's still at war with fossil fuels. What happens to oil companies 2 or 3 years down the road, right? And according to the president, he told oil companies, you should not be using your profits to buy back stock for dividends, not while a war is raging. You should use those record-breaking profits to increase production and refining. But he went on to say, our country needs to pass permitting reform to accelerate the development of clean energy. So there's really no incentive for oil companies to reinvest back into American energy. On one hand, you want their profits to subsidize prices at the pump, but on the other, you want to give special treatment to green energy. There's really some serious disconnect here. It's like he's trying to hang on to the green energy dream while giving a subpar deal to the oil industry, and they won't bite. The cost of producing oil in the United States is already some of the highest in the world, and at the very least, you need to give them some guarantees. Because if all they hear is green energy this, renewable energy that, what's the point of pouring billions into building refineries, pipelines, and other energy infrastructure? And this is the exact reason why oil companies have been so aggressive with their stock buybacks. We are seeing big oil dumping their money into buybacks because there's nowhere else to put their capital to work without getting burnt. The risk is just too high. We can see a clear trend of big oil companies cutting back on their capital investments year after year. In 2013, they spent over $150 billion, but in 2022, they have only pledged $81 billion when the price of oil was the same at around $100. So without the right incentives, trying to increase production won't really work. And when it comes to incentives, it doesn't hurt to listen to what the experts in the oil industries are saying. Now, the American Petroleum Institute, or the API, has come up with a 10-point plan to unlock American energy, and it tackles the core issues. For example, one of the points is to dismantle supply chain bottlenecks by removing tariffs on commodities such as steel, which the oil industry needs, they desperately need it to build refineries and infrastructure. And even today, there's still a 25% tariff on structural steel imported from China, which is the biggest exporter of steel by a huge margin. You cannot expect to buy cheaper steel when you make over 50% of the world's supply more expensive to import to the United States. It's a really basic idea. If the input costs are too high, it increases the upfront cost or the upfront risk for building any new refineries, especially when there are no guarantees for oil in the future. And there are many others, including making it easier to obtain financing and lifting the developing restrictions on federal lands and waters, right? Biden will have to make it easier to develop oil rigs on US soil. And all this won't instantly help increase the oil supply, but it will help ramp up production levels over time. So the entire strategy Biden has to increase oil production really doesn't make sense. Some parts, like refilling the SPR at $70, isn't attractive enough. Selling the SPR itself won't push prices down for long, and the oil industry isn't given any concrete guarantees. This is why I believe the oil plan isn't going to work out as well as the administration thinks. So we are still going to have higher prices for quite some time to come. And I think the only path left is demand destruction. And that is perhaps the only way I can see energy prices coming down. When you crush demand to the point everyone's too poor to spend, because OPEC isn't playing ball and there just isn't enough incentive for American companies to pump more oil. So let me know what you think. Can Biden's plan really lower prices at the pump, or is it just a nothing burger? Let me know in the comments below. Stay safe, be sure to smash the like button and subscribe as we navigate through these crazy times.